This is our Forex blog for October 28th, 2014. We had an exceptionally good day today, and I've fixed one or two patterns and added a few other ones and am done for the day. Usually it takes me till 7 or 8 o'clock at night to fix bad patterns. We have over 900 of them, so obviously there's quite a lot that can go wrong. Here's the euro dollar today. Did exceptionally well. Started off with a breakout buy here, which then resulted in a sell up at the double top. So we made about a pip or two or broke even on the first one. Then that's your risk. That's your reward on that trade. You can see you made 1.5 times to 2 times more profit than what your risk was. And also notice the trailing stop very quickly moves to break even. Here's the initial risk on this trade. Notice it went break even in less than 30 minutes, and it made 5 to 8 times more profit than what the risk was. And this was a strong trend, but the statistical momentum ran out, and it came back up to the high here and kind of failed to go higher. So we go short. The stop's a little bit above off the screen. You can see it made at least 2 times, maybe 2.5 times what the real risk would be, and then it had a loss right here. This is your loss. However, when you entered the trade, this was your initial risk. And so what's absolutely awesome about trading with high probability statistical methods are the wins are bigger than the small initial risk, and the losses are half or even break even. And in some instances where this trade here didn't pan out, you still made a pip or two on it before it flipped and went short, and then you made money. And so that's what's beautiful about our trading systems, and that's how they're designed. I personally trade these in a way where if I have a loss, I will bet a little bit more on the next trade, which also magnifies the profitability and gets back if you do have sometimes 2 and 3 losses in a row when the market's really choppy. I'm betting a lot bigger, and a lot of times I'll get this huge win on a much bigger position size. Not only do I easily sweep up the couple of losses early into the trade, then I'm left with another 20-30 pips, with 2 times my initial trade size. So it's just astronomically good. Here is the euro yen, and you can see last night it had a loss here. Before that it had a win. Your risk on that one, the reward was again 1.5 to 2 times bigger. Here's your risk. Notice the stop goes to break even pretty quickly, and the win is bigger than the loss. We go long right here. Here's your risk. The reward is just a little bit bigger than what your risk is. Here we go long again, and we got stopped out, right around there. And again, that's still 1.5 to 2 times bigger profit than what your risk is. And that's, again, why trading is just so awesome with our tools. And I'm going to get into the currency indexes too. Here's one that didn't do that well. I'm going to just try to focus on the 4 major pairs that people trade every day. This one, I think, did pretty well yesterday. The pound yen's a tough one. So it basically made a pip or two, made 20 pips, made 10 pips, made 10 pips. Here we got long. We pretty much broke even on that trade. Maybe made a pip or two here. Went here, lost 5 pips. Got that back on the next trade. Or actually, no, it was still in that trade. It got out here with a profit. Lost about 8 pips here. But today, it didn't do that well. You can see it went short, lost, went long, had a 5 pip loss, got short, pretty much broke even. And when we identify a trend, I wait for a pullback. A sharp, extremely sharp down move like that tends not to work, so I don't have buy signals in. I like to see more of a gradual pullback in a trend. Or if the statistical methods are there, such as this one, I will buy a sharp pullback, but it's usually based on time. You can see the highs here at 8:22, 8:30. So it was almost about 10 minutes on the pullback. If you get a 3 or 4 bar pullback in less than 5 minutes, those tend not to work. It's all about the probabilities, and over time I've found out what really works and what doesn't. Here's the last of the 4 major pairs people trade. You can see it went short right here. Here's your initial risk. We made a little bit more than our risk. We went short or long here at the bottom, and it made about 2 times more profit. It bought this breakout right here, mainly because it was a new high. That's a pretty high probability pattern. It doesn't happen that often, and that generated 4 to 5 times more profit than what the risk is. So even if you have a bad day in one of the currencies, usually there's currencies that are trending, and most days there's at least 1 or 2 currencies where you get you 30 to 50 pip win, and if you have a loss or 2 or sometimes even 3, you can get the loss back with one nice trade like that, especially if you bet a little bit bigger. These are our currency indexes, which will further enhance your trading ability. They let you see visually what each individual currency is doing: the dollar, the euro, yen, pound, Swiss, Australian, New Zealand, and Canadian. And what's beautiful about them is they let you see a lot of different things that help you decide whether to be looking for buys or sells. For instance, the dollar, it was hourly moving average for over 12 hours. Broke out above it, but couldn't get above yesterday's most actively traded price in all dollar pairs. So this is a really high probability place to go short because the trend is down. And of course, for the next few hours, it trends down. Above the point of control, it tends to go up. Below it tends to go down. Same thing with the hourly moving average, and on a short-term basis, the 15-minute moving average. So there's some really high probability trades selling the dollar from 5 o'clock onward. And you want to trade a strong currency as that one. So let's look at some of these other ones here. You can see the Australian is very strong. The New Zealand, is in a slight uptrend, and the CAD for the most of the day is in the uptrend. So you can sell the dollar CAD. Let's just bring these up real quickly and showcase the weak dollar, strong CAD. You have many opportunities to sell, especially on pullbacks or hour-and-a-half sideways range. This isn't enough of a pullback. The fact that it went kind of sideways in a rectangle pattern for 2 hours, pretty high probability. It didn't really lead to much, but we just made new lows. So, you might have gone short here, had a loss, gone short again, and got your loss back plus a huge profit. Here, the Australian dollar. So again, strong Australian, weak dollar. You're looking to buy this. And of course, it just keeps going up, 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 especially after 4 o'clock. Remember, that was the time. This just made new highs, broke down, went to about the 50% Fibonacci pullback area. You could go long there with your stop underneath the 62. Very, very tight stop. And, over the next 2 hours, it went up. You probably would have got out with about 20 pips in this range. And then it broke out right here. And it wasn't surprising. And it went up another 40 pips. Here's the New Zealand, which, let me go back and look. Yeah, it had a small uptrend. I'd be a little cautious when it made new lows down here for the day, but it quickly came back above here, and you have a nice little, wedge pattern right there, trend line break, and it just exploded up. And a lot of times you see flag patterns on huge, big, quick moves like that. It's going to make another wave up, and that went up 20 pips. You definitely want to be careful with high volatility currencies like this. So you might not want to have bought this, but once it showed, it went up a little bit more, came down, wasn't able to break that low. This is a pretty high probability place to get in, and it wasn't the biggest profit in the world, but it was a low risk trade that gave you, again, 1.5 to 2 times more profit, or at least a potential profit, than what your risk was. So the currency indexes can really help you identify which currencies to be in, and then you can use our signals to find the precise place to buy and sell. The currency signals do not use the currency indexes as of yet. I plan on putting trades only because these occasionally find trades that my other methods don't find, especially on super strong trend days where I usually look for a deeper pullback before I will buy or sell. And if one currency is exploding up in the index and the other one's exploding down, you can take more risky trades, and they tend to work, and they also tend to give you 20 to 50 pip trades, so it's worth taking. So that's it for today's Forex blog.